Good morning, good morning, good morning. It's Tuesday, the 18th of February. It's the morning blast with myself and Mr. Michael Brown. Just as he's joining, let's do the legal. So, as usual, nothing discussed in this space session constitutes trading or investment advice or infers any kind of endorsement by PIQ Global Limited, trainers PIQ or PIQ Suite, or indeed the hosts, which, as you know by now, is the amazing Mr. Michael Brown, and myself, Mr. Ryan Paisley. Good morning.
Good morning, Ryan. Good morning, everyone.
Morning. How are you, my dear friend?
I'm very well. I'm ready.
Very well. Oh, someone had a blowjob this morning.
Oh God, no. Well, I was just going to say I've been in the office for a couple of hours already. Couple of coffees, bracing walk across London Bridge this morning.
Oh,
Sets you up a
beautiful.
treat for the day ahead.
Beautiful. Okay, well, let's go straight in. Let's dive straight in. What's been occurring?
Indeed, yes. Let's dive straight in, and the short answer to that is not a lot, because of course the US, the US was of course closed for President's Day yesterday, which meant that there was no trade in cash equities or in cash treasuries, and there was also very thin trading conditions elsewhere, with the foreign exchange market not going anywhere particularly fast whatsoever. It is worth noting, though, that we did see some landmarks in European equities yesterday, which continued to trade relatively well. Gains led yesterday by the defence sector, of course, as Europe looks set to ramp up defence spending quite considerably. The DAX in Germany, that's trading at a record high. The CAC 40 over in France, it is at its highest level since last May. And of course, that's before Macron's government started to implode. And the IBEX and the FTSE Mid in Spain and Italy, respectively, are at post-financial crisis highs. So just some milestones worth noting there amid the absence of anything else of particularly much interest. Despite the market closures and a relatively quiet trading conditions, there were a few fundamental catalysts yesterday that are worth mentioning. Firstly, in the commodity space, Bloomberg sources reported yesterday that OPEC Plus are reportedly considering a delay of the planned supply increases, which are due to come into place from the start of April. If they were to postpone these cuts, it would indeed these increases, forgive me, it would indeed be the fourth time that OPEC has delayed plans to revive its production since they implemented these cuts in 2022. It is worth noting that the Russian oil energy Minister Novak did note yesterday that there have apparently been no talks about delaying these production increases, but that doesn't necessarily mean that a delay isn't going to happen. So certainly one worth keeping on the radar. In terms of other bits and bobs, a couple of stories here in the UK. Shein, of course, the Chinese fashion, I suppose you could call them, retailer. They are reportedly ahead of their potential IPO here in the UK. They are reportedly under pressure to lower their valuation to $30 billion.
Hold up.
What?
I said this in yesterday's blast.
Oh, did you? Oh, well, fuck it. We'll move on from that one then, and we'll move on to
tune in.
Sorry?
That's why people should tune in and get the news a day early.
Well, exactly. Yeah, Titanic's just sunk as well, apparently, according to my sources, but they're still awaiting confirmation on that one. The other story that I don't think you have mentioned, because it broke late yesterday, is on the motor finance mis-selling issue that continues to bubble away here in the UK. Of course, this is impacting the banks quite significantly. Lloyds, they've set aside about 500 million quid's worth of provisions. Close Brothers have set aside about 200 million quid to potentially deal with compensation claims. There was news a few weeks ago that Rachel Reeves, the Chancellor, was looking to intervene in this case. The way in which she was going to intervene wasn't exactly made clear, but in any case, the Supreme Court have told her to butt out. They are scheduled to hear the case around motor finance in early April, and they did not give a reason for rejecting Rachel Reeves's intervention, but they have informed the Chancellor that the case will still be heard. So one to watch for UK banks.
Just on this, because I do think that unless you're in the kind of the finance bubble or the city bubble, that this is going very underreported. But this could be a massive blow to banks and stuff, because we're talking gazillions at risk here for banks for mis-selling the car leasing stuff.
Yes,
but the one thing that I think is quite interesting to pick up on is obviously Rachel Reeves, any other time Labour would be saying this is indicative of the city being bad and evil, and we must take them and hold them accountable. But as soon as they're in power and they realise that they're fucking up at everything they do and they need growth wherever they can get it, she's like, well, hang on a second, maybe they're not all bad, maybe give them a break kind of thing. But to be fair, the High Court are exactly right. You can't just let them off just because you want growth numbers.
No, you're absolutely spot on, worryingly. And I do think it is being considerably underreported. The easiest kind of parallel to draw, and I'm not sure it'll be quite as big as this, is basically PPI.
Yes, exactly.
Everyone who's listening in the UK will remember the PPI scandal, how much it cost banks, and also how many bloody adverts there were about it on the television for donkey's years. It could end up as a similar thing. But as I say, that court case will be held at the start of April before Easter, so one to watch. In terms of other bits and bobs from yesterday, plenty on the monetary policy front. Overnight, we had a 25 basis point cut from the Reserve Bank of Australia, lowering the cash rate to 4.1% in line with expectations. It was what you could call a hawkish cut, though. The RBA in their guidance noting that they are cautious on the prospects for further easing, and that if policy is eased too much too soon, then disinflationary progress may stall. Governor Bullock very much echoing that at her post-meeting press conference, noting explicitly that the decision to cut rates today does not imply that further rate cuts are coming, and that they continue to wait for more evidence on inflation. Along with that, we've heard from plenty of central bankers over the last 24 hours or so. Bank of England Governor Bailey yesterday reaffirming his gradual and careful approach to interest rate cuts, and affirming that the fourth quarter GDP data out of the UK does not materially change what he called the general story about the UK economy, which, when the economy grew by just 0.1%, hits the nail on the head. We also heard from the ECB's Holtzman. He said that there is, I quote, some probability of a rate cut in March. By some, read 100%. But Holtzman is, of course, a hawk, so he's never going to say that explicitly. And from the Fed, we've heard from 2026 voter Harker, who, in short, just stuck to the script. And overnight, we also heard from Fed Governor Waller, who is, of course, one of the most influential on the Fed board. He noted that he favours holding rates steady until inflation moderates. Inflation progress in the last 12 months has been, quote, excruciatingly slow, and that cuts will be appropriate in 2025 if inflation repeats its pattern from last year. That is at risk of reading too much into the remarks, perhaps slightly more hawkish than when we heard from Waller about 6 weeks ago. He was explicitly saying 3 or 4 cuts could happen in 2025. It looks like he might have dialed that expectation back just a little bit. In terms of other bits and bobs, 2 things lastly from me. We have about an hour ago had the latest jobs figures out of the UK. Not the best, but not the worst labour market report from here in the UK. Unemployment holding steady at 4.4% in the 3 months to December, although even the ONS themselves say that the data that they use to calculate that is not worth the paper that it's written on, so take it with a huge pinch of salt. Earnings pressures, meanwhile, remain pretty intense. Overall pay rose by 6% on an annual basis over that period. That's the fastest rate of earnings growth since November of 2023. When you take bonuses out of the number, pay rose 5.9%, which is the fastest pace since April of 2024. Certainly not going to move the needle for the BOE. Earnings pressures are still way too intense for a sustainable achievement of that 2% inflation target. But of course, that comes ahead of the UK inflation figures for January, which are due tomorrow morning. And last but by no means least, Reuters sources reported yesterday, one for the aviation-focused folk out there, Boeing, their Air Force One program could be delayed until 2029 or, quote, years later. I believe it's already been delayed by about 5 years, so it looks like that program continues to experience quite considerable turbulence.
Oh God, there it is. There it is. Oh God. Just on that Air Force One story, Trump played a blinder with that because because obviously all the contracts for this were signed during his first term, and he fought Boeing's then CEO for a fixed contract, so a fixed amount that it was going to cost. And Boeing at the time, there's a lot of analysts saying there's no way Boeing can do this, but obviously they just wanted the bragging rights of saying they're building Air Force One. It's already cost Boeing $2 billion, so already $2 billion over the contract. So fair play to Trump to lock them in at at the agreed rate. It saves them
Yes.
some money. Okay, thank you for that, Mr. Brown. Just a quick shout out as usual for Cam, although there's no crypto blast today, and also Zach, obviously, for the overnight news roundup, which I've also posted his tweet up in the old jumbotron on this Spaces session, and the overnight news roundup will be going out shortly via email, etc. So where should I start? Okay, so Elon Musk's Department of Government Efficiency is seeking to access data systems within the Internal Revenue Service that house personal taxpayer information. Access had yet to be given, but one of the people noted saying it's being considered by some in the agency as urgent goal by the Doge team. Just a sidebar on this, I did see Elon Musk posting a image yesterday of a spreadsheet where it's all people receiving social security in their ages, and like there's still some people receiving social security up to like 300 years old. So there's obviously some massive errors on this on the social security sheet, unless there's a lot of vampires.
Maybe he is right, but my money would be on this being not necessarily a scam or fraud as they're claiming, but just government being frankly shambolic in how they organise their data, which is how most things tend to work.
Oh, absolutely, but either or, it still shines that they need to sort it out. I think it just shows how much waste is out there, and I think it's not just the US. I think any kind of government that like that, I dread to think what if we had an agency in the UK, what it would discover. But anyway, Japan's government approved new targets to cut the country's greenhouse gas emissions by 2040, alongside a revised energy plan and an updated industrial policy for the same period. Moving over to China, a sell-off in China's bonds extended into a fifth day amid signs investors are shifting some funds to stocks and seeking out higher yields in the short-term money market. Chinese investor zeal for AI-related assets fanned by DeepSeek has spread to convertible bonds, sending the CSI convertible bond index to its highest in more than 2 years. That's according to Bloomberg. Sticking with China, Bank of America is the latest bank to get behind China's stock market, saying the market moves from tradable to investable, noting tailwinds from DeepSeek's AI breakthroughs to better than expected US relations. Moving to the UK, this is something that Michael's covered via Twitter, etc. today, is the Sterling GBP OIS continuing to fully price in next 25 basis point BOE cuts by June after this morning's jobs data. It's showing 57 basis points of easing by the year end. That's from 59 basis points on Monday. Sticking with the UK Chancellor Reeves is to tell cabinet ministers conduct a full audit of Britain's 130 or so regulators to ensure that they are working to boost growth, including looking at whether some should be scrapped. This would be the same regulators that a couple of weeks ago she was going to looking for growth ideas. So they truly have no idea what they're doing anymore. They are scrambling. Moving across the channel to Germany. Germany's labour market has been profiled in the FT ahead of Sunday's elections, noting the country has lost almost 250,000 manufacturing jobs since COVID, as companies and politicians sound the alarm that Europe's industrial heartland is suffering an irreversible decline. This ties in kind of with what Michael was saying at the very start of the show with European defence names. The German industrial military complex is pretty much the only positive in German industry at the moment. So you could argue very easily that there's a reason why they're not that keen on war cutting or war stopping so fast, because they do need the business, unfortunately. Goldman Sachs on Monday raised its year-end 2025 gold price forecast to $3,100 per ounce, up from $2,890, citing sustained central bank demand. Michael, I don't know about you, but I'm seeing more and more people start moaning up about this some conspiracy and the Bank of England is going to default on its gold, and there's a lot of bullshit going around in the gold market at the moment. Fact is, there's just some buying. People are moving gold around because of potential tariffs and stuff. So please avoid people that are saying. Also, I saw people that I normally quite like. I do quite like, but when you see gold going up for like 3 months straight and then it has one significant down day and they call that down day manipulation, I mean, come on, lads, give your head a wobble. But anyway,
also just on gold, there is a hell of a lot of noise out there. I think we're probably of the same view. It's probably going to get to 3,000, and that's when it gets interesting again.
Yes.
In the meantime,
it feels like it needs to touch
ignore the bullshit, basically.
Yeah, exactly. There's just people love to kind of come up with some weird conspiracy theory, but most of the time it's just very boring.
Especially when it involves gold for some reason.
Yeah, exactly that. Exactly that. US gas exports are the most likely beneficiaries of a pledge by Donald Trump and India's PM Modi to make India a leading buyer of American energy. That's according to analysts. So read LNG for that. Geopolitical names. What have we got here? European and Ukrainian officials told the FT that Zelensky may have made a strategic error by not including any specifics on his mineral rights pitch. It was written as a lure for Trump, but the lack of detail meant Trump could easily name his price. Russia's sovereign wealth fund chief, Dmitriev, said he has already met with several members of Trump team in Riyadh on Monday. All I can, and I quote this, all I can say is they are great problem solvers. And I think President Trump is a great problem solver, unquote. That's according to CNN and our friends at News Squawk. French President Macron said that he's talked with President Trump and Ukraine's Zelensky after meeting European leaders earlier on Monday. Work will, quote, work will continue based on European Commission's proposal, both in supporting Ukraine and in developing and investing in our defence.
Is he lending them his own personal white flag?
I knew that. I knew a white flag gag was coming. It was so on but yes, probably. US President Trump announced on Truth Social that US forces carried out a precision strike in Syria over the weekend, targeting a member of Al-Qaeda. Just a few equity names before I go back to Michael. Apple is conducting a quiet pivot to India, wants to diversify its supply chain beyond China. It's according to the FT via News Squawk. Tesla said on Tuesday it started mass production of the revamped version of its Model Y in its Shanghai factory. Southwest Airlines is slated to shed 15% of its corporate workforce, eliminating some 1,750 jobs in an effort to cut costs and streamline the carrier's operations. BHP, the mining giant, sees signs of economic recovery in China and central bank rate cuts reviving demand for steel and copper, but flagged risks to global growth from potential trade tensions as it logged its lowest first half profit in 6 years. And finally,
didn't they cut their dividend as well?
I'm not sure.
I saw a headline about it. I can't remember exactly what it was, but yeah, worth bearing in mind.
There you go. And also, finally, something that me and Michael said probably wasn't dead, and it sure as hell isn't dead. It's still alive and kicking. Honda is reportedly willing to re-enter a merger or partnership discussion with Nissan. So reviving what was going on a few months ago or a month or so ago, but only if Nissan's current CEO steps down. So again, keep your eyes on that one. And that's it from me. Back to you in the studio.
Good stuff.
The studio.
Thank you, Ryan. Right, in terms of today then, of course, US participants return to their desks from the President's Day long weekend, and that probably means that a whole bunch of Trump Truth Social posts and also trade headlines will also be dropping throughout the day, so do bear that in mind. In terms of scheduled events, the calendar is a little bit light. At 10 o'clock this morning, we have the latest ZEW sentiment surveys out of Germany. The expectations index, easy for me to say, that's seen rising to 20 in February from a prior 10.3, and that will be the highest level since last July if realised. Well, the current situation metric set to remain depressed at minus 89.4 compared to the prior minus 90.4. Of course, this data comes ahead of German federal elections this Sunday, the 23rd of February. Moving into the North American session this afternoon, the only notable release on the docket is the January CPI figures out of Canada. Headline CPI is seen rising by 1.9% compared to the 1.8% that we saw in December. Money markets currently see the March Bank of Canada meeting as a coin flip between a 25 basis point cut and rates remaining on hold, although I'd argue that tariff and trade shenanigans are probably more important for the policy outlook there. The earnings docket is relatively bare, as it is for the majority of this week, at least in terms of notable reports. And lastly, in terms of speakers, we're due to hear from the Fed's Barr and Daly, the ECB's Cipollone and Holtzman, as well as Bank of England Governor Bailey, who is attending a fireside chat in about 40 minutes' time at 9:30. And that's pretty much it from me. Apart from our programming note, because we've got a different time tomorrow.
Oh, yes. Yes, yeah. So what time are we doing? Remind me. 7:30.
Yes, as a one-off.
as a one-off because Michael's got a very important meeting. He's going to see, he's going to go see what size boobies he's going to have done at the sex clinic. Also, big scheduling announcement as well. I'm going to organise. Well, I say I'm going to organise. I'm going to post that. Me and you are going to be in a pub.
Well, that doesn't narrow it down, does it?
Well, exactly.
Could be any
but
day.
I'm thinking it's going to be non-farm Friday. March is non-farm Friday.
So the 7th of March.
Yeah.
Yeah.
I think it's the 7th. Yeah. I'm thinking I might actually. We could even do it every non-farm. But yeah. So I'm thinking. Yeah. I was going to say, has anyone got any kind of problems with it being on the first Friday of March? But to be honest, I don't really give a shit because me and Michael are going to be there. So.
And also, they can't actually speak. So.
Yeah, exactly. So yeah, thumbs up from everyone. So yeah, so I'll work it out. But yeah, if anyone around London or can get into London, let's go and have a few beers on a non-farm Friday on March. So there you go. Probably in the Token House or something like that, something big enough that I can get served and the bar's not too high. But anyway, moving on. Right, Mr. Michael Brown, thank you so much as always, listeners. Thank you for tuning in, and we'll see you tomorrow at 7:30. See you later.
Bye-bye. Oh, hello.
All the time.